Yeah, hello guys, how you doing? So this is my chart on GBP USD. I just want to do a quick analysis. Then after this, I'm going over to USD card. So this is my chart. What you see over here are what we call key levels, right? Because uh, you need to understand that market moves from one level to another level. Now, the essence of setting your key levels, right? I trade on 4 hour time frame. Actually, on the daily time frame, I'm more of a swing trader. Then I look for entries on the 4 hour time frame. The reason I don't go to lower time frame, I'm going to cover that over the course of this video. Now, one thing you need to understand about trading is these key levels, they are very, very important. We call them psychological levels too, because in a way it impacts, improves, or could actually, you know, affect the way you trade, right? So if I'm on a trade, right, and I'm edging closer to take profits now, I'm looking at these psychological levels as possible pullback levels. So instead of me to just, be dumb enough to just leave everything and open the psychological levels will break. And if you can see, when I go over to my weekly time frame, these are levels that has been holding for years. They are very, very strong substructures. So let me go over to my weekly time frame. So this is where I start with majority of my analysis. Okay, yeah, I think we are here now. We are here. So if you can see the what was it called? If you can see the overview of the chart, you see our all-time high. Immediate all-time high is still around 2007. That was 2.12. You know, GBP to USD. And if you can see, for the past 8 years since 2015, we've actually been ranging, between this particular box. Now, if eventually we're able to break out, we can come back to test at 1.7 before going further to 2.12, closer to the all-time high. Now, how do you start your analysis? So one of the first things I do, although a lot of us still need proper training, to be able to execute trades like this, but you come over to the most immediate. It could be I love to use the most recent 5 to 10 years. Let me understand what is happening in the markets, in the past 5 to 10 years. And the best way to do that is using your weekly and monthly candle. Now, from what you can see, we are in an overall downtrend from 2006 till now. You can see I started analyzing from 2006, which is about 17 years ago. There's a reason to that. Now, from 2006 to now, we've been in an overall downtrend, right? Now, there's a difference between an overall trend and immediate trend. I don't know if you get my point. So, these are little intricate details that actually affect the way you trade, right? So, in trading, it is best for you to always follow the flow of the river, right? Trade in the direction of the trend. The trend is your friend. It's just as if you are swimming against a big wave of water. Big wave, it's going to blow you out. But if you are swimming in the direction of the wave, you have much or higher probability to actually be able to, scale through. So now, as you can see here, we are in from 2022 now, being in temporary uptrend, right? Now, what do I mean by temporary uptrend? You can see a break in the market structure. So we made high here. This is a low. This is lower high. This is a lower low, a lower high, a lower low, a lower low, a lower high, a lower low, and a lower high. So these are how you identify market structures. Now this is a lower low. The market was supposed to continue with the same pattern to make a lower high, then go back to a lower low to test this level. But there was a break in market structure. So instead of the market making a lower high, the market came to make equal highs here. Now, when the market comes to make equal highs, you should already understand that the market structure has changed. Now, from there, equal highs, the market made an higher low, which is a low that is higher to this. They made an higher high, an higher low. They made another higher high, and you can see it's already forming another higher low here. So what this tells me in a nutshell is that for the past 1 year, we've been in a temporary uptrend, right? So whenever I'm going over to my chart on the daily, or on the 4 hour time frame, I'm looking forward to buy opportunities. I don't know if you guys get my point. Until something changes my situation. So the way it works in the market, right, is if there will be a change in the direction of the trend again, the immediate trend, right, we have to see something to change the market structure. So now we are supposed to make a lower higher low here, then make another higher high. So if we didn't make this higher low and we come back to make equal lows, that already tells you that the market structure has already changed and we are coming back down. So these are one of the simple ways to which you understand how the market structure is, the direction of the market, where it's moving. Try to predict, right? But the best way is to actually react to the market. Let the market make its move. Let it show you a leg. Then you can be able to, if the market shows you right leg, right, okay, left is coming. But if the market is yet to show you any leg, it's not right for you to just say, I think it's going to bring a right leg. So let's cut to the chase. We can also see the trend line. That was the first one. The change in market structure gave me a bullish assurance. That's the first one. In trading, we use confluences. You don't just use a particular, uh, you know, you don't just use a particular sign to ascertain. You need at least three. Now, the second one, you can see there's a bullish candle, a bullish weekly candle. Now, the market structure you see on a higher time frame is supersedes any other thing you see on the lower time frame, because the higher time frame set the pace for the lower time frame. So if you see a wedge pattern on the higher time frame, we are definitely going. If you see a rising wedge, you know where we are going. If you see a falling wedge, you understand what is happening in the markets on a higher time frame, even if the lower time frame is telling you something different, because with the lower time frame there's always a lot of noise, right? So that is why a lot of swing traders, they do better compared to day traders, because they are looking at things holistically and they are actually able to, it gives you peace of mind anywhere you are in the world, anywhere you are, right? A candle is about 4 hours, 2 hours or so. If you are trading, what's it called? If you are trading on higher time frame, so you have enough time to actually be able to, move around, do whatever it is you can do. You are not meant to be fixed on the laptop. You don't need to go through other things. So the second confirmation is this trend line. So if I'm going back now, you see, I love to trade with history, right? This trend line dates back to about 2021. Okay, June, yeah, about June 2021. It has actually been broken. It's not just broken with a little fault. It was broken with a bullish candle on a weekly time frame. This tells us that, this confirms again that whenever we are looking for opportunities in the coming week, we are looking forward to buy. So even if you see a sell opportunity, you understand that it's not something you can hold for long. I don't know if you get my point, right? You understand that this is not something I can hold for long. It's something short. Maybe you just target, 1:2.5, 1:3, and you're out of the market. The buys up the market, for the coming week, except we see a change in the market structure. That is that's the first one. And also this trend line are also supporting, this trend line from the bottom, merging with those key levels again, So that gives you another three confirmation that, okay, we are going bullish into the month. So let me go over to the daily, what's it called? Let me go over to the daily time frame. So with the daily time frame now, you can map out your immediate, what's it called? You map out the immediate trends, immediate reactions in the market. Then you go over to your 4 hour time frame to execute the trade. So majority of what you did on the weekly time frame still stands on the daily time frame, but you're actually able to see things, in better perspective, like while you're zooming in on the daily time frame. So let me just go over to the 4 hour time frame. I want to quickly show us something, some of my trades. Okay, I think I marked them. So basically, I love using counter trend lines, right? I love using Fibonacci. I don't want to add all of those ones to my chart, because it makes everything look. I love it when my chart is clean. Okay, let me show you guys something. I love it when my chart is clean, like very clean. So I'm sure you guys are going to love this. I'm sure you guys are going to love this. Like this is a beautiful chart with all the levels and everything. So I love it when my chart is clean like this. So I want to show you guys something, some of the trades I took. Some of the trades I took. Okay, as you can see, this now, this okay, I don't want to really zoom in, but I just want to give you an overview. This was 1 ratio, almost 1:7. This is 1:5 coming. I think we should see another one. You see, I don't